Hello everyone. I'm preparing just a short video to tell you about the MACD indicator. MACD stands for Moving Average Convergence and Divergence. MACD is one of the very reliable indicators when it comes to Forex trading. The reason being gives a very good idea about where the momentum of the market is and how strong is the current trend. To explain more, what I'll do is I'll plot the MACD indicator on this chart. I'll use a value of 12, 26 and 9. Okay, the value of 12, 26, 9, what it represents is that 12 is the first moving average, 26 being the second moving average, and 9 is basically the difference. 9 is basically just what is the difference between the first moving and second moving average for the last 9 bars. So what does is if the market has 12 exponential moving average followed by 26 moving average, the 9 is basically a difference of what is the difference between the first moving average and the second moving average over the last 9 bars. As you can see here on the MACD, there are two lines, the green being the more sensitive one and the blue being the more relaxed one. If the sensitive one is above the slow moving average, that means the market is currently in the uptrend. Here the market is currently in the downtrend, this particular window. So if you map the MACD with the this particular chart, this is the uptrend, so the MACD responds to it. This is a mini downtrend and the MACD shows the same. Then again the market goes up, it comes down momentarily as you can see here, then it again goes up and again comes down. So MACD basically just confirms whether the trend is currently genuine in the market or not. But one thing that I've seen most of the traders do is they just limit the analysis of MACD to understand whether currently the market is in the trend or not. However, MACD can also be used to understand how strong is the current trend and when is it about to end. I mean, very few traders basically use it to understand if the current trend is going to last for a longer time or is it about to come to an end. And that is what MACD convergence and divergence analysis tells us. If you look here, the price is making high followed by a low, then a higher high and followed by a higher low. If you look at the chart, MACD is making the higher high and then at this particular point it makes another higher high. So that means MACD is kind of confirming that the trend is genuine. It is a very high, it is a very kind of strong uptrend. But if you come here, you will see that the market is making another higher high, but the MACD fails to respond. And then it makes a lower high. So what this kind of proves is that there is a divergence between the price and the MACD. The price, whereas it is showing that the market is going in an uptrend, MACD is not kind of confirming it. So this kind of tells us that the trend is about to come to an end. And that's what happens later on. The market makes a double top, maybe you can consider it to be a triple top. And then from there, the market comes down here. It again makes a lower high and it comes down even further. At this particular point, I'm sure there is some Fibonacci level which is getting applied here. Maybe let me just try to see if there is some. Okay, I'll plot high and low. Let me take this particular point and stretch it to this side. I'll plot this 4 levels, 36.8. Okay, yeah, it found some kind of support at 61.8. But this doesn't look to be that much reliable. Let me just see if I can plot from here. This looks to be a more lower point and kind of in the same trend. Okay. Yeah, it found a support at 650 Fibonacci. No. I think I plotted this incorrectly. If I would have taken this higher, this would have come down a bit low. Yeah, so I think it found the support at 50 Fibonacci level. Basically there's a good confluence of the 50 Fibonacci level of this last trend and 61.8 Fibonacci level of this lower trend. So that's why it got a support here, and from here the market went up again. But if you are at this particular point of time and if you see a divergence like this, then it may be a good indication that you need to be ready to close your trade and the market is about to go short. If you look here, this short rally starting from, if someone would have opened a trade here and would have closed here, they would have made about how many, 75 to 80 pips. So MACD, like I said, is a somehow not fully utilized by a lot of traders. Most of the traders just use it to check if the market is in the uptrend or the downtrend. But if you can apply the technique of understanding the convergence and divergence, you can also use it to understand if the trend is going to last long or is it about to come to an end. Thanks for watching this video. Please feel free to post your comments on this page, and I would be really happy to read those. Thank you.